Hello, everyone. Thank you so much for joining us again as we ramp up our webinar series.
Everyone. Thank you so much.
Ooh, I have myself double muted, so I need to get rid of
our webinar series.
Facebook. There we go. Nice little screw up at the beginning. Luckily, this is being recorded, so I can edit that piece out. Facebook, you're live anyway, so who cares? But we are back on track with our Strategic Partner Education Moment series with Maxwell Devonshire Realty. We are joined today by Lisa McInnes, who is a mortgage broker, and Jason Henberry with Fundible. And what we're learning about today is Fundible and how it can play an integral part in your buyer's purchasing track or path or experience, whatever you want to call it. But this is going to be a wonderful piece of education for everyone out there. And everyone, the floor is yours.
Okay, great. Awesome. Thanks so much, Alex. It's good to be here, and thanks for inviting us in to speak to your group. Lisa, maybe I'll kick things off a bit, give some background on the Fundible program, some of the work, and then maybe share it with you, and you could share some of the work that we've done together and how that's helped you and your realtor partners close some more business recently. So Alex, I'll share my screen and you let me know if there's any challenges there. You should see Fundible Finance Corp on the slide here. Everybody good?
Yep.
Yep. Okay, great. Awesome. So yeah, so we're setting out to change the way people buy homes, and I truly mean that. My background, I've been in the mortgage industry for almost 20 years. I've been in a number of different roles in the channel, you know, from actually supporting clients with financing to being on the lending side of things to product development and so on. And so our partners at Fundible, we looked at the current state of financing, and we realized it's not really designed to support the home buying process. It's kind of an archaic thing that you think you can get pre-approved for a mortgage and then go buy a home, but in reality you can't. You have to go buy the home, you put it under contract, and then you spend the next 7 or 10 days figuring out whether or not you qualify for it, and you've got to do a lot of paperwork, and it's like, fingers crossed, I hope this works out. And so there's a ton of friction in the mortgage process today, and we're looking to reduce or even eliminate that friction so that the home buying process can be smoother, not just for buyers, but for realtors, for real estate professionals, and mortgage professionals as well. And so there's a multi-win effect here, and we'll get into all the benefits for all the different parties in a second. But at a high level, I think as industry professionals, why we love this program. We've been in the market for a while now, and we've really gone through what we would call our beta phase, where we're testing different ways of using the product, and we're now looking to expand our reach and work with more partners. Here's basically what the kind of feedback that we're getting from people is that, by having the ability to write a purchase offer that doesn't require a financing condition. That's what Fundible is doing. So we're setting the home buyer up so they are fully approved before they write the purchase offer. And I mean fully approved, like zero condition financing. We've approved the buyer, we've approved the property. We put you in a position as a realtor to write a more compelling purchase offer to get the seller's attention. Because when you think about it, there's never really a good reason to have more conditions in a purchase offer. When you can eliminate conditions, that allows you to negotiate on things that are more important to you, to the buyer, things like chattels, purchase prices, timelines, and so on. And so we had to come up with a number of innovations to make this product to actually deliver on that value proposition. And so we've changed the way we approach financing, and I think for the better. So let's just keep moving on here, and I'll explain in a moment what I mean by sort of that triple win for all the different parties. But first, where we started with this product. So we started ideation about 2 years ago, and that was in the heat of the market in some markets. And Alberta came on, obviously earlier this year, really strong, or late last year, earlier this year, and started to see multi-offers. But we were seeing that in other parts of the country for the last couple of years. And we thought, wouldn't it be nice if clients could write a financing free offer and eliminate the liability in it, help the buyers be more confident in their purchase, but also, just set the advisors up, the realtors and mortgage professionals, so they can deliver a better experience. And so there's a ton of things that are, I don't know if wrong is the right word, but the purchase process is cumbersome, right? And there's so many parties involved, and there's so many things that can derail a file on the financing side. Appraisals go wrong. Sometimes lenders want to review, inspection reports, and they see stuff in there that, they don't like, so they withdraw their offer to finance. There's documentation issues, there's taxation issues, there's all kinds of things that mortgage professionals need to validate in the process, and you never really know where, the deal is going to go sideways. And so, when you're talking about like a really hot real estate market, people were writing offers, and we saw when markets shifted that put a lot of people in jeopardy. Now, in this market, in a softer market, we're seeing different reasons that people like this product, and it's because people are nervous about writing purchase offers when sometimes they haven't sold their home, or maybe they're investor clients and they've got a really good deal on a property, and they want to be aggressive on the purchase price, but they know that they need to make sure all their ducks are in a row so they can get the best deal possible for that property. So there's a number of use cases here that buyer behavior has shifted in the last couple of years. Even though we're still in a softer market, buyers still don't want to put financing conditions in there, because if they can remove it, they can negotiate a better deal on the home. And so what we're really doing here at Fundible is we're helping buyers and realtors and mortgage professionals add confidence, create more confidence in the purchase process, because we've got what is essentially certified financing to back up the purchase offers, even though those offers haven't been written yet. They haven't been accepted by the seller. So this is better than a pre-approval. This is like completely condition-free financing, zero risk that the financing doesn't come through. So it's 100% fully underwritten upfront. There's no last minute surprises. We basically issue a commitment letter that reads like an option contract that says, Mr. and Mrs. Buyer, here's your option agreement that says, if you win the bid on this property, you can force us to close the mortgage, and you know what your terms are upfront. So that you kind of understand what the worst case scenario is. And then what we're actually doing here is, we don't want to be the financing option. So what we're doing is we're putting a confidence rating on that client's ability to get a mortgage. We're assessing the property that they're purchasing to look for pitfalls in what the main lenders might view as challenging and getting in the way of being able to move forward with their financing. And so what the way to think about this product is more like an insurance product, where we know that the client is like 95% sure they're going to be able to get a mortgage at Scotia or TD or any number of lenders, and we're evaluating their financing plan that Lisa puts together. She'll take a look at the client like she normally would, figure out where they qualify, what the best mortgage option is for that client, and then bring that to us. And then we say, yeah, we believe that that's exactly how this is going to unfold for the client. So we're giving like it's not technically insurance, but it's like an insurance product where we say, if that plan fails, we will step in and we will close the deal. And so that's different. That there's no other product in Canada that has that level of value proposition. So from the bottom up here, like these are all the players who benefits from this, like everybody in the process. We're really excited about this product. This is the first time that you have a financing product that the buyer cares about, the seller cares about, the mortgage pro cares about, and the realtor cares about. Like it actually makes a difference. And so sellers, they're especially in this market, man, in a hot market, the problem was differentiating the offers. You'd get 15, 20 unconditional offers. Well, that doesn't help the seller make sense of the quality of the offer. You still don't know if that person needs a mortgage or not. It just came in blank. So it doesn't actually help add confidence to the seller. And a lot of times, that ended up problematic for all the parties. Now sellers, when you submit a purchase offer, we allow you as realtors to put in the offer or to put alongside the offer that the buyer has been financing certified by Fundible. So the seller knows that there's no risk that the deal falls apart due to financing. So it's like better than having a financing condition for a seller. And so they're more willing to accept Fundible certified offers. In fact, our track record to date is 100%. I'm not kidding. We haven't done a ton of business. We've been in market since April. So it's not like we're talking about thousands of clients here, but 100% of the approvals that we've issued for clients, those clients have ended up successfully negotiating the purchase of those properties. So it's like 100% success rate. And in some cases, there were multi-bids, multi-offers on those properties. Even in a slowing market, if the property's nice, you're still seeing competitive bids. We're seeing that. So there's like what's happening in the media, and then there's what's happening in reality. And we still see some of our mortgage professionals bringing us files where they're expecting multi-offer on certain properties. Nice properties, obviously, attractive properties. So home buyers and sellers love it because it, like I said, it brings more confidence to the deal, helps the buyer stand out, helps them write an offer and stand a better chance of winning the property. Mortgage professionals and realtors, it's about streamlining our business. It's about having more certainty in our process flow. It's about getting to close deals faster, right? If you can remove your conditions sooner in the process, obviously you can get to a happy buyer sooner in the process, right? And gone are the days of like, Thursday or Friday afternoon where you're thinking, I wonder if the financing is going to come through. From the realtor's perspective, that's stressful, right? You never know heading into that condition removal date, whether or not something's going to jump up from the shadows and pull you back down. And on the mortgage side, for people like Lisa, it's like you never have to make that uncomfortable call and say, it's Thursday afternoon and say, look, there's something in this file. Maybe the lender can't reach the employer. Maybe the appraisal didn't come back quite on target. Who knows? There's something in here that means we're not going to be able to remove subjects, in the next 24 hours. So we need to ask for that extension to get to Monday. Extensions are a thing of the past. When they're Fundible certified, you and the buyer are in control, and you can buy. You don't have to ask the selling realtor to grant you an extension for 1 or 2 or 3 days while you're sorting things out. You get to sort things out, and so you never on your own, and so you don't put the deal or the file or the purchase at risk, right? Because anytime you ask for an exception, the selling realtor or the selling party can come back and negotiate from a position of strength to say, sure, we'll give you that extra 2 days, but we want this in exchange. So anytime you have to renegotiate, that's a bad thing. And so we're really happy about, just the way the product's being used. So again, I'll just reiterate, realtors, the feedback we're getting from our realtor partners is, they're using Fundible to help their buyers stand out. So we're getting sellers' attention. They're using Fundible, even if it's not a competitive situation. In a slower market, we're seeing them remove the financing conditions so they can negotiate harder on something else that matters to the client, whether it be timeline or pricing or chattels or any other number of conditions that you'd rather focus on as a realtor. So it's a better experience for your clients. We're reducing friction. There's the financing extension piece I was just talking about. And obviously closing sooner, knowing with certainty where your business is at, it's a big deal. You're not waiting 7 to 10 days, to go firm on the purchase. So let's see, I'm just trying to get the slide to advance. There you go. Anyway, so this is a relatively exclusive product because we raised $30 million this is a real deal as well. We have an underwriting center, we have in-house appraisers. I'll talk in a moment about some of our innovations that make this product work, but we do our own appraisals. We can turn them around in under 24 hours, which, we had to look at how do we shorten the cycle in order to deliver on this promise and the value proposition. But because of these facts, we need partners that understand our product. We need and we need partners that are willing to put it in front of their clients. So it's very much on an exclusive basis. So you have access to this through partners, our financing partners like Lisa, who is basically making this product available to everybody on this call. So we can talk more about that afterwards. We'll open up for Q&A in a second here, just kind of get through a few more slides. But in summary, right? We're creating more certainty in your business. No more offers falling apart because of issues with financing. You know where your clients truly stand before they write the offer. Again, we're not looking to be the lender. We're confirming that we will fund the deal, but we want that client to be successful. So they're free to go and get their mortgage with any lender they want. So not only are we guaranteeing the purchase, but we're also giving the client flexibility to get their mortgage wherever they want. And so that puts them in a position to negotiate, with confidence, from a position of strength. They know exactly what's possible for them, and it's one less hurdle towards a closed purchase. And obviously that streamlines your business. It creates happier, more relaxed clients, more referrals, the whole 9 yards, right? So now I want to speak to some examples, and I'll just quickly say there's like 3 or 4 ways that people are using this. The first is pretty obvious. I've talked about it a bit already, which is having your offer stand out in a competitive offer scenario where you've got potentially multiple bids, right? So you can write an offer with a financing condition. That's okay. That's kind of the way it's always been done. Then, in hotter markets, you tend to write offers with no conditions, which doesn't add any confidence to anybody in the deal. And then there's submitting an offer with certified financing. And that's what Fundible allows you to do. And we're proving real time that's helping people win the bid. The other one is a buy first, sell later. And we're seeing this is where we're getting most of our files right now. You've got buyers that want to go out and buy a new property. Maybe they're downsizing, maybe they're upsizing. It could be a lateral move. It could be whatever. But they have an existing property that they know they need to sell in order to unlock the equity for the down payment, or they don't want to carry 2 places, whatever the case may be. And they're stuck. They're on the sidelines. They're frozen. They know that the market is such that they can go and they can get a great deal on a house, or they can negotiate a little bit stronger right now because things are softening, which is really positive for buyers. But on the same token, the flip side of that coin is they're not sure if they can sell their house in a timely manner, right? So what we're doing is we're creating liquidity in the transaction, because we will guarantee the purchase even though they haven't sold their existing property. Also, even if they haven't listed with you yet. So you can go into your presentation with your clients and say, look, let's get Fundible certified. Our plan is, let's go find the house that you love. When we find it, let's write an offer and put it under contract. And then we can take the time to sell your existing house on your terms, right? So as a realtor, you get to talk to the client in terms of like, I'm not going to put you in a situation that's uncomfortable where you're going to be forced to drop your price, or forced to sell on more aggressive terms, or forced to accept just any offer that comes in. Because you've got Fundible certification, we can close that purchase even if we haven't sold your existing property, and then we can take the time to find the right offer and sell that property, at the right price, on your terms, the right timeline, all that kind of stuff. And so the buy first, sell later aspect of this is huge. And we're seeing like retirees, people who really probably, they're on pensions or whatever, they don't necessarily have the incomes to afford a mortgage. They sometimes don't even need a mortgage on the new place, but they're using our product just to secure the buy and then sell their place. So we've got some real world examples of that. And then foreclosures and investor clients, sort of like, those really like tight timeline, aggressive purchases, being able to write clean, competitive offers is huge. And Lisa, I'm going to pick on you in a minute to talk about a deal that you just did. I think we funded it yesterday, and it's a foreclosure situation. In fact, actually, why don't I hand it over to you just for a second? Do you mind sharing a bit about that, and then I'll continue on with this?
Sure. So, hello, everybody. It was a pretty exciting file. It was a foreclosure where it was with the courts. The client came to me. It's been on the market for, I think it's been on the market for over a year, if I remember right. So it was sitting for a while. It was initially listed at 2.2 million, and it had dropped to 1.8 million. Foreclosure with the bank, of course. And so the client came to me with this listing, and I looked at it, and as soon as I saw it, I knew it was a Fundible deal, because as we know, you can't go into the courts with conditions. You get what you get. If you want the house, you got to put it in, no conditions, and you get possession usually within 30 days of submitting your offer. So this client was an A client, very strong portfolio. It was an owner occupied home, had a lender on board an A lender on board, even before he put the offer in. But I wanted that confidence that Jason was talking about, knowing that we had that insurance and backup plan for the client in case something happened, which we got the approval from the traditional lender. And then it came to the appraisal and the inspection, and the lender actually pulled out on the deal with, I think, 10 days till funding?
Yeah, it was pretty tight.
Yeah.
Yeah.
And
It was a complex deal.
yeah, 10 days till funding, the lender pulled out on the deal. Sorry, I had to decline a call. So the lender actually pulled out of the deal, and thank goodness we had Fundible in place because we weren't scrambling. So the lender pulled out of the deal due to the quality of the home that it was in at that point. And all it really needed was some elbow grease once the client gets in. So the client got keys yesterday. They're going to go in, they're going to clean it up, do the fixes that it needs to be done. And the traditional lender has already agreed to do the refinance on it once we are back in place, like once it's in that position where it's a more acceptable and the appraisal goes from fair to average. So did I kind of cover?
100%. We actually did a call, just for everybody on this call. Lisa and I did a call before this, and there was like 2 or 3 things that derailed this file at different times. And if you're interested in hearing the whole story, because it's very real and it's very cool, actually, the way we were able to save this file. But more importantly, like, nobody was stressed. I mean, there's always stress when things go sideways. The amount of stress was so much lower that all the advisors were able to just focus on, okay, solutions. And Lisa, you came up with a really good solution, which is, even though that primary lender, they withdrew with 10 days to go, we were able to close. So we did that yesterday, but that main lender has said, look, if you just fix these things, we will allow a refinance because of and they don't normally, but because they were committed to the file, they just needed a few things to like meet their standards. And so those fixes, I think you mentioned, they're going to take like 30 days or 60 days. And then what's really cool is we want the client to be successful. So we don't have penalties. We even offer financial incentives if they can pay us out early in the first 30, 60, 90 days. And so everybody's aligned. We just come in, we close the deal, we remove the stress. You were able to actually focus on the post-funding solution. That client's going to end up in the mortgage they wanted anyway in like 60 days. It's awesome. It's a good news story, right? So yeah,
it is. And so one of the other hiccups that happened is he was selling his current owner occupied property, and that deal fell through like 3 days before possession of the new one. So thankfully, because we combined the buy before you sell and the foreclosure property. So we combine the 2 products that we have with Fundible into the one.
Okay,
so
I'm glad you mentioned that. So this is like a couple of things that happened. So not only did Fundible come in and certify the purchase, but you thought you had the down payment sorted out from the sale of a property, and that fell apart too. And so because we had the insurance wrapper, we closed everything. And I think we needed 3 mortgages to close that, right? Like 3 different properties needed to be financed in order to save the day. But we had that plan figured out before the person even wrote the offer. And we actually, all of us thought, like, we'll never need to execute on this plan. Honestly, if we had like version 1, version like worst case, version 2, version 3, right? And it was like, okay, well, we'll never end up here. We ended up there, and we ended up there really fast because, primary lender bailed. The house that was it was almost a firm offer as far as I recall. Like, they walked away at the last minute. So many things went wrong. It would have been so stressful for the realtor partner, obviously for you, but I'm glad that worked out. So thanks for sharing the story.
Yeah. You're welcome. No, thank you for helping me on it.
No, it's great. It's cool. Okay, so I'll just bring this back, a few more slides, and then maybe some questions, because I find it's always helpful. Like, every realtor has a different way that they like to run their business. And probably if you're on this call, you're hearing different things. So would really love to encourage some questions so that we can learn a bit about how you might use the product in your business. So I think Alex offered an opportunity to throw some questions in Q&A. So if you have anything that's popping up for you, we would love to address those. I'll just wrap up the formal part of the presentation here over the next couple minutes, and then maybe we'll open up for some Q&A. Okay, so in order to do this, let's get into sort of like how this works, because the traditional world of finance is not set up to do this. And the reason is lenders will not look at a file. So this is like the banks, the monolines, the alternative lenders, like nobody wants to underwrite a file until there's an actual live purchase offer. And the reason for that is all the economic models in the entire mortgage industry, right? From mortgage broker channel to main bank channel, all of it is based on working on a live file. And so the underwriting centers know their fall off rates. They get a file, they underwrite it, they issue a commitment, a certain number of those commitments come back, and then a certain number closed. And the model is based on that. Nobody can get their head around underwriting the file before there's even a live purchase. It skews the model. And so this is why nobody actually, like when your client goes to get pre-approved, a big part of the education, like as mortgage brokers, is, hey, that pre-approval you have over there, it's not actually a pre-approval. It's really just a rate hold. It's like educating clients that a pre-approval doesn't mean you're actually approved. And that's really hard for Canadians to get their head around. So that's the first like major hurdle that we all face in this business. And so we had to look at it. We said, okay, well, if we're going to actually certify financing, then they need to be approved. So what do we need to do? We need to take all those underwriting steps and we need to like put them at the front of the process before we have a purchase offer. So it's like, so we had to find a lender that would not only guarantee the purchases, or we had to become a lender through our partnerships that would not only guarantee the purchases, but we have the resources to allocate enough money to the entire process, knowing that we potentially or most likely won't fund those files. So our team is made up of a few people. Some of these names you might know because I know you're in Alberta, Lisa, and so probably a lot of the realtors on this call are in Alberta. Calvert Home Mortgage Investment Corporation is our funding partner. They're our partners in the business, but they've also, allocated a significant amount of capital. I think I mentioned before, like $30 million to support this business model. And we've got some of the brightest minds in the alternative funding space here that have come together to create this product. And so these are the four major innovations that make this possible. The first is underwriting. So we kind of beat that horse a little bit on this call. Like Lisa, when you have a client, you introduce them to Lisa. Lisa takes the application, figures out where they go for funding, where their main plan is, and we're underwriting that plan essentially. So we're saying, yeah, 98% confident that plan is sound. The only time you're going to need Fundible is if something unforeseen happens, but guess what? That happens all the time and it's stressful. So the underwriting process ahead of the purchase offer, huge innovation because we had to figure out how to deliver on that cost effectively. Then there's appraisals. So in order for this to work, like let's say you're shopping with a buyer and it's like, Wednesday afternoon and you want to write an offer on Thursday, you can't wait 7 days for an appraisal. So we had to create a process that allows us to do our own in-house appraisals with our own salaried staff. So we're not reliant on the appraisal market or third-party appraisers to deliver. So we can turn appraisals around in under 24 hours, oftentimes like 6 to 8 hours. So if you're writing an offer on a place tomorrow, we can get behind that property before that timeline, which is absolutely critical in order to deliver on this process. And then Lisa, just on the file that you did, and I know this doesn't speak to every single file, but you did an appraisal through us, right? Prior to on this foreclosure sale, court order sale. And obviously the main lender wanted to do their own appraisal. Did we deliver on those timelines? And, how did the values I know the answer, so I'm kind of leading here, but how did it turn out? Was our appraisal better or worse than
your appraisal was definitely better. The appraisal that came through the lender, because, and again, different lenders have different processes. So I can't just go and pick an appraiser with some lenders. And this was one of those lenders. So I had to use an automated system to order it up. And the appraiser actually came in, I think, on that value, 300K lower than what your appraisal was.
So that took time. You didn't have control of the process because that's the way the lending world is. The lenders want to control that process, right? And we were able to turn it around super fast. And it's not that we came in high, we just came in at what we believed was the market value based on comparables, the true market value. So anyway, really cool. We've got a lot of money to back up the business. So when we actually say we're guaranteeing that purchase or we're certifying the funds for that purchase, we are putting that money aside on a one-to-one basis. So if we're allocating $500,000 for, 123 Main Street, that money is put aside. So there's like no risk that we don't move forward on our funding. We're not over leveraged in any ways. In fact, we don't leverage at all. We're just using our own money to guarantee the purchases. If something happens and you need us to close, we close with our own cash. And then legal prep, we have a bunch of in-house processes that just allow us to streamline getting the documents out to the lawyer at really, really well. And so that's really important too. There's just those fast closes, those last minute, like what happened with your file, Lisa. It's just, oh no, we lost the sale of that house. We have 2 more days. We didn't think we were going to need those funds. And, we had 2 days to close, and we managed to pull those funds together as part of the guarantee as well. So anyway, that's kind of it for the formal portion of the presentation. Why don't I pull it back and see if there's any questions? Alex.
Before you do that though, I want to pop in. So I've been in the industry for over 13 years. And what really excited me about Fundible was seeing who the lending partner was. Calvert has been my #1 private lender for almost my whole career. So I know the kind of work ethic they have. And for anybody that knows me knows that that's a pretty big thing for me is who my partners are. So having Calvert backing this was probably one of the smartest things you guys have ever done. So I just wanted to add that in there.
They're fantastic partners for Fundible, and I totally agree. Yeah. A lot of what we're able to do here wouldn't be possible without the team at Calvert.
Yeah.
Wonderful.
So Alex.
So we have some questions. One pertains to rates. So what about guaranteed rates on a normal approval? When you run into this issue, does the rate remain the same, or do you up the rate to guarantee the purchase? And does the buyer need to agree to any rate increase before an offer is written?
Okay, that's awesome. So we look at the client. So there's different stage gates. There's getting the certified financing, and then they're able to get their mortgage wherever, and they don't need us. That's kind of like the first thing. So in order to cover our underwriting costs, and our whole business model assumes that like 90% of people won't actually need us, just like normal insurance, right? So we charge basically a valuation fee in order to appraise the property, and we charge some, depending on the size of the mortgage, that people need us to put like that capital aside. Some people only need us to guarantee 300,000. Other people's need us to certify like 700,000. Depends on the purchase. We have a capital cost, and that is 10 basis points on the loan amount. So the valuation is really cool. Actually, let me just, sometimes I speak in jargon, so I apologize. So if you need us to certify $300,000, the 10 basis points is $300. So it's like you're basically renting our money while you're in the process of securing your financing during the purchase. So it's super cost effective from that perspective. And we put the money aside for like 2 weeks while they're working with Lisa to get to a place where they're unconditional with their main lender. If there's a problem with that main lender, then we can extend for another 2 weeks for $99. So it's like really, really cost effective to have that money set aside. And then as soon as they know that they've got the mortgage in place elsewhere, then they just release us of our commitment, and we move on. That's how we make our money. On the underwriting piece, though, we charge $259 to underwrite the file and to appraise the property, and we actually include 3 appraisals inside that $259. So it's like ultra, because we have our own. It's crazy. Like you can't get an appraisal for $259, let alone do 3 of them. So the idea behind that is like we want to approve the buyer first, and then they go shopping, and then they find the property. And so now we have to approve the property. That part of the process doesn't go away. We just do it ahead of the purchase offer. So because we were able to build our own internal staff and we have the funding that we have, we're able to actually do this at a more cost-effective level than third-party appraisers, because that's their main business. But our main business is the business of guaranteeing purchases, and so the appraisal piece we don't need to make money on. So so if you write an offer on a property, let's say we've appraised it and all is well, you write an offer, but you don't win the bid. Well, we allow you to go find the next property, and we'll appraise that next one as well, and the third one as well. So we'll go 3 appraisals on that 259. And if you are unlucky and you have to write an offer on a 4th property, we just charge $150 for any additional properties. But most people end up winning within their first 3 properties. So from that perspective, it's super cost effective. On the rate side, so then there's the what if we need to fund, right? So in a perfect world, 90% of people, that's all they pay. Then they get their main mortgage. But if they need us to fund, we're basically set up like a private lender. We charge a 1.5% lender fee on the mortgage amount, and we have a graduated rate with no penalties. So like our rate starts at 5.99. And so as long as they can pay us out in the first 30 days, it's 5.99. If they can pay us out in the next 30 days, it's 6.99, and then it jumps up to 7.99 from there. And so if the person is carrying our mortgage after 90 days, it's because they needed a private mortgage, and our private rates are more favorable than most private lenders anyway. And Lisa, you had I know earlier you had a comment like the deal that you just closed yesterday. I think the client is getting a better rate through us on the emergency mortgage than they are through their main lender. Is that right?
Yeah.
Right.
So because we got in before the big increases, the client has a better rate with the fundable mortgage than he would through a traditional mortgage. And even still, when you say 5.99, if we think about it, this product is mainly for people that have 20% down payment. So our typical 5-year rate right now is sitting at about 5.25 thereabouts to 5.49 anyways. So the rate difference, yeah, we can lock that with the traditional lender as a 5-year, but the rate that they're paying on these funds is pretty silly, to be honest. Like
there's different ways. It's silly, totally, because we're able to do that because that's only 10% of the files that fund, and we make our money on the renting of the capital for the guarantee, right? And so as you know, we understand our business enough that we earn enough over here to give the clients a great deal here. What we want is to make this easy on the borrower. We want them to look at it and go, this is a no-brainer, because it's a better experience for Lisa, it's a better experience for the realtor, and the process is like for everybody, right? Now, there's lots of different ways to look at this. Remember, they only need our mortgage if they can't get a mortgage anywhere else, like if you've exhausted all options because something went wrong. So it really shouldn't matter what the rate is, because without us, they wouldn't have closed, because we couldn't find the deal anywhere else. Now, so that's why people do this in the first place, is to have that protection. But then when you couple in the fact that our rates are basically in line with market rates, and they know their worst case before they even start the process, and now they're just out there trying to do better. That's a great thing. It's a great win. Yeah. So anyway, and then Lisa, like current private lending rates, if you need an emergency mortgage with 2 days, like if you had waited till the end of that process with your deal, where do you end up on rate? Like, and can you even get it done?
12 to probably 16%. And on this deal, I couldn't have, not with the complexity to it. There's no way.
Couldn't have gotten it done in a timely manner, and then the rates would have been exorbitant. And so it's like, yeah, it's like going to secure that private alternative beforehand, and knowing exactly where you stand. So Alex, I hope that answers your question. So a few moving parts, right? And then of course, you know, at the end of the day, it really depends on what the client needs. Do they have the capital for the down payment? Do they need us to look at the property they're buying and the property they're selling to come up with all the capital? So every scenario is different, but we make it really, really cost effective to apply. And then we start working with the client to figure out what their needs are. So.
Wonderful. I know you touched on it briefly there, but what are the costs? You said 3 or 10 basis points for whatever is being held, $259 for an appraisal, up to 3 appraisals, $99 for an additional one. If it does have to go down to the I keep saying fundably,
That's okay.
fundable
Yeah. Cool. Yeah.
process, or funding, it's 1.5% of the total mortgage amount. And then whatever the interest rate happens to be based on length of time. Any additional cost to that to either the buyer, or the realtor or partner?
No, you nailed it. So you've got the application fee, $259, covers your appraisals. If you need 3, that's cool. Additional appraisals, like if you need 4, they're $150. It's where you got the 99 from is so we guarantee the amount of money. It's 10 basis points on that, and we're putting that money aside for 2 weeks while all the partners go and make the deal firm, right? And if you need an extension on that, it's just $99 to buy another 2 weeks. So it's really cost effective. And so we just keep pushing that down the line until if it turns out that they can't get a mortgage somewhere, then they just close, kind of thing. But as soon as they've got their financing sorted out elsewhere, we're released of our commitment and the fees stop. But it's really just the 10 basis points and $99 extensions until they need to close. But yeah, otherwise you nailed it. The lender fee and then the graduated rate, which starts at basically market rates, and no penalty, because we want the client to be successful. We want them to pay us out as early as possible.
Wonderful. Someone else is asking if they can get a copy of the PowerPoint that you shared.
Yeah, well, I think you're recording this. So would you send out a recording of it, or how
Well,
do you want to handle it?
the recording will be available, but I think he wants an actual
Copy.
one. Yeah, so if
Yeah,
you
for
email
sure.
that to me, then I can send it out or
Oh,
include it in
100%.
our
We'll,
one.
we'll get you a copy through Lisa. No problem.
Perfect. And then, so does the client work through their existing mortgage broker, or do they meet with a fundable agent in person to have all the options explained to them?
It's a great question. So Lisa is our Fundable certified mortgage pro in your area. And so what you would do is, if you're interested at all in learning more about this, I would suggest let's make sure everybody knows how to reach Lisa. And then because every realtor has a different client mix. Some work with investors, some work with first-time home buyers, and there's different ways of running your business. What we can do is maybe schedule a call, like one-on-one with Lisa, maybe even myself, and just talk about your business specifically and see how Fundable will fit. So Lisa, do you want to share your contact info for that?
Already did.
Oh, you did already in the
In the chat, yeah.
in the chat. Okay, I'm just going to throw that out there for everybody, just in case someone's watching this and can't see the chat. But it's Lisa at lisamckinnismortgages.ca and 780-619-0895. There you go. There's your plug, Lisa.
And appreciate that.
Okay, cool.
And then, so Lisa is the mortgage partner. I know on the website it said that there's realtor partners and mortgage professional partners. How does that work for a realtor being a partner?
So if you're a realtor and you want to access the product for your clients, and we do get a lot of realtors reaching out, we're supporting that through our Fundable certified mortgage partners. So if someone on this call reaches out to Fundable directly in Lisa's area and says, hey, I saw that presentation with you and Alex and Lisa, and then we'll just introduce Lisa back in that process. So then what you do as a realtor is you would introduce your clients to Lisa as early as possible in the process, so that she can get her head around their financing options, and then we'll approve them, and then you can go shopping and with a true 100% certified pre-approval for your purchase.
And just to confirm, what is Lisa's servicing area?
Well, pretty much all of Canada except for Quebec.
Okay.
But Jason, we can't with Fundable.
Fundable is BC and Alberta only for now. Alberta and Ontario. I said BC. I haven't represented BC, so it comes off my tongue. But we're working on BC, so it's Alberta and Ontario for Fundable.
Okay. And do you have to have 20% down, or does Fundable work with insured mortgages as well?
So it depends on the resources. At the end of the day, it comes down to what resources does the buyer have. So there's nothing that says the buyer can't work with Lisa to get a 95% or 90% mortgage on their purchase. we're okay with that. But we will certify up to 80% on the purchase. And so all we need to know is that, you know, in that worst case scenario where they need to execute on the fundable financing, is we'll advance 80 on the purchase. And then they need to come up with 20%. Now, we often facilitate that 20% because they've got equity in another property, for example. And so we'll come in on a buy before you sell. We were willing to certify up to 100% of the purchase price, as long as there's enough equity, or as long as they have enough cash, or as long as they have like even a gift or resource or support from family. So we just need to come up with the 20% creatively. And there's a number of ways that we do it. And oftentimes we finance that if the collateral's there.
Wonderful. Well, that's all the questions we had. Yeah, thank you so much for both coming out, Jason and Lisa. It was some great information. Where's the best place, other than reaching out directly to Lisa, what is the best place for someone to find or learn more about the program?
Well, I'll throw my email address out there and just, you know, reference this call. Just say, hey, I saw you on a call with Lisa and Jason and Alex. So it's Jason at Fundible, Fundible.ca, or just go to the website, fundible.ca, and there's plenty of information there. And you can reach out through that site. And if you do, there's like a little notes box, and just again, say, saw you on the call with Lisa and Alex, and would love to chat more. And then we'll get on a call. We'll talk to you more about the product.
Wonderful. Any last words from either of you two before we end it?
No, I think we've kind of covered everything. I really, although there is, so I backtrack. One of the good things about this product is, you know, a lot of times clients are super focused on rate, right? They're focused on, I got to get the best rate. I got to get the best rate. But when we go into a competitive offer and say, I've had my realtor partners call me up and say, hey, we're going into multiples. What's the shortest we can do on condition dates? So with this product not needing condition dates, guess what? Now I don't have to go to the lender that has the shortest turnaround time, but potentially a higher interest rate. So now we can get the clients the best of all worlds.
Yeah, I love that. I have not. So, okay, so we're in a phase right now where we're learning how people use the product. That is like a fully new one for me. So not only, okay, so you're not stuck on the time. I'm just repeating that back to you, Lisa, because it like hit home for me. You get to choose the lender that is the best fit and has the best possible like product features for that client, as opposed to focusing on the lender that's going to turn it around faster.
Correct. Because sometimes our lenders that have the best rate, they also have the longest turnaround time because they have the best rate.
Yeah, well, because they get all the deals, right? Everybody wants the rate.
Yeah.
Okay, amazing. I love that.
So
there you go, Alex. Even I'm learning something today.
Yeah, hey, we're all learning today. That's what these are about. Strategic Partner Education Moment Series for everyone involved. So that's great. A bunch of stuff in the chat is saying how wonderful the information was. So thank you to you both, Jason and Lisa, for coming on today and being willing to share and explain what this product is. And it's a new thing. So clearly we're both still, all three of us were learned on stage today. So that is always a good thing. I'm going to stop the recording. So if you want to watch it later, follow us on YouTube, or of course, follow us on Facebook, and you'll be able to see it there as well. But cool. Thank you, everyone. Have a great day.
Yeah.
Okay, thank you.